Fitz-Gerald and Keith, I want to get your market outlook for 2025. And also, have we already seen kind of those last-ditch efforts to adjust portfolios as we move into December 31st?
Well, let's tackle those two questions in reverse order. I think that there's still a couple trading days left, so we've still got some money on the table. The computers are still active. That's what you're seeing this morning on the heels of the pre-holiday run-up. But there's plenty of fuel in the marketplace. I think we're going to go to 7,000 probably by Q2 of next year before pulling back a bit.
It's bullish. Okay. Well, let's talk about kind of the sectors that we're looking at for 2025. One of the big pieces of news that's crossing right now, and it's still really not resolved, is what's going on with the banks. So banks and business groups are suing the Federal Reserve over the annual bank stress test. We've seen these in place since 2007, 2008, the financial crisis. We created stress tests. It was supposed to protect the American consumer. Maybe they've seen their day, though. The Bank Policy Institute, they represent J.P. Morgan, Citigroup, Goldman, the American Bankers Association, the U.S. Chamber. They are all now claiming that the current process falls short of its goals and that it violates the law. Keith, I want to get your reaction to this very big move by the banks.
Well, as you know, I've been harshly critical of the Fed, so I am glad to see this because I think the Fed has been so far out to lunch that they've been an insult to people who are actually out to lunch on this issue. I think the banks have got a point. I think that they need to press this. I think they need transparency. But most importantly, they need consistency to operate properly. And that, as I understand, is what's really driving this lawsuit because the Fed is all over the map in terms of how it does these things. So it's very hard to plan your capital, very hard to plan your buybacks, very hard to plan your distributions and operate properly.
I want to ask you about another story with the banks, and this could really impact consumers going forward. Obviously, we're seeing the Biden administration in its last 27 days now really started to make some serious moves legally. But one of the concerns is about what they're going to do with the Consumer Financial Protection Bureau. There is this attempt now by the CFPB to redefine checking accounts. Basically, they're going after the overdraft fees. And there's concern there's going to be some last-ditch move here. How much does that concern you? Again, for the consumer, great news. You may not pay that $35 when you overdraft check. On the other side, though, that would be a major hit to bank profits.
Well, it potentially could be. And the question is, are they encouraging that behavior? Are they loosening controls in their own interest? I mean, personally, I can't stand that stuff. I wish we had a responsible consumer and people knew how to balance a checkbook. But that, unfortunately, is a long way to go and a function of the education in this country. But I think, again, that probably fears are overrated, overblown. But if the banks can operate on trading, they can operate on investment, they can get back to running a clean book, then, I think that's probably a good move.
All right. Well, the rule was finalized this month. It applies, I want to be just specific here, it applies to commercial banks and credit unions with more than $10 billion in assets. So It's not necessarily going to hit the smaller banks, which have had enough trouble over 2024, to say the least. Let's talk about where you're putting your capital right now, where you're making your investments. At this point of the year, we're all starting to look to 2025 to see, we had a great run up in tech in 2024. Fair enough. Maybe that's a little bit of a frothy sector. What are you looking at and how are you making your moves?
Well, funny enough, Cheryl, I don't think that it is frothy. I think it's exciting. I think it's dynamic, but I also think it's still very early days, particularly when you're talking about AI and all the business use cases for that. It's not just about one use case anymore. It's hundreds of use cases, and every business on the planet is going to adapt, adopt, or die. So I'm not keen to get off a winning horse in the middle of the race. I'm going to continue to focus on companies like NVIDIA and Palantir and Tesla, where I think it could be huge, huge winners in 2025. Okay. And then I'm going to continue to look at defense because the world is a challenging place right now.
Well, I think defense is a smart move considering what we're seeing in the Middle East, China, the Russia-Ukraine war. John Lasky, jump in here.
Yeah, Keith, I'm really puzzled by what's going on the credit market. My goodness, since the middle of September, we've cut Fed funds by a full percentage point, yet at the same time, that 10-year Treasury yield, that benchmark for the 30-year mortgage rate, has gone up by nearly a full percentage point to, what is it right now? It's just over 4.6%. Do you think that 10-year yield is going to come down by much in 2025?
That's an interesting observation, John, a sharp observation. That's something I've been thinking about as well. It's really a function of risk more than it is income. So to me, the question is, what's the global angst? What's the global portfolio look like? Could it come down? Maybe. Will it come down? I'd like to think so. So I'm not smart enough to figure that out exactly, but my guts are telling me, my experience are telling me, 45 years are telling me it's going to relax a little bit.
All right, Keith Fitz-Gerald, it's great to see you. And Happy New Year if we don't catch up with you.
You as well. Thank you.
All right, we'll see you soon. Coming up, everybody, President